the changes, let's give you an example. Let's take real estate. You've got CMHC. CMHC is the government arm that insures high ratio mortgages, residential mortgages, commercial mortgages. By and large, all of your first-time home buyers, high ratio mortgage borrowers, all seek CMHC insurance. CMHC put out a paper and an announcement not too long ago stating that in their opinion, the real estate market in the GTA could drop, prices could drop by anywhere between 12 and 18%. And accordingly, if you have a look at their credit criteria, they've tightened the box. So they're in themselves, these announcements are already creating a downward pressure on prices. The banking community, whenever there's a crisis, the first thing the banks do, which is what they always do, is they start shutting down or tightening their credit box. And it's not necessarily a logical, and I'm not being critical, it's just a fact. The banks are huge organizations, and the way they're structured today, they don't have the ability to be creative with one client while putting another client in a box. So this has already changed. So again, one has to look at what is taking its place. And what's taking its place is the asset-based lending pool is growing. They're doing more business. There are new asset-based lenders surfacing. And when I say new, they could be asset-based lenders from the US that have opened branches here. So there's a whole new lending world out there. And the asset-based lenders can turn deals quicker. They can analyze deals quicker. They look at each deal on its merit, while trying to deal with the banking community takes much longer. So I think that in the short term, at any rate, I think that as a business person, or even seeking a commercial or residential mortgage, look to the secondary market. Don't ignore the primary market, but look to the secondary market, because I think that the secondary market is going to grow exponentially over the next little while.